Ladies and gentlemen, welcome back to the live stream. If it does not say live in the bottom right hand corner of your screen, then unfortunately you are watching the recap. And if it is 10 to 11 p.m. Eastern Standard Time, then go ahead, refresh the page and click on the latest live stream. We should be live as long as it is not Friday or Saturday. We are in there like swimwear, baby. Let's get a strong Friday close in here. Futures are up about 1% on the NASDAQ. You got the S&P up about 0.77% and the Dow futures up 0.62%. So it's looking pretty damn good, I would say so myself. How are we doing today? Jennifer Hendricks. Yo, yo, yo. How's the portfolios? Portfolio looking decent today, I hope. A little bit better than that. I think mine was up like 6% today. Absolutely crazy. Yo, yo, yo. Yeah, if we look at the SPY, it's been so volatile, but we have not done anything. Dude, like the SPY hardly moved today, but it moved a lot. Does anyone else feel me? We're like, oh, we're getting the sell-off. Oh, no, we're not. No, we're not. Oh, we're getting the sell-off. No, we're not. Over and over again. What's going on, Cheese Chaser? He said, feeling real good. Chasing the cheese, baby. Portfolio is decent today. But, man, can we just go down lower and just get it over with? Is that a thing? Can we, tell the market makers just, rip the Band-Aid off and let's get this thing done? I bought the dip last year on AMC, sold the high, now I'm back to buy the dip. Well, I like it, baby. I like it. Whatever makes you money, I'm not opposed to it. I don't really care who buys, holds, sells. This is pretty much coming together like clockwork. Kind of, over the last 6 months, we forecasted this, and this would be, in my opinion, the time to buy the dip, especially we're holding above 13, and we've seen a strong close above 13, and also about a 1% move in after hours. So you're firmly above the resistance level of $13 per share, the prior support level before, before two Fed meetings ago, where you did hit 1290, found support and rallied 200%. We're finding support again, and it would surprise me if we did not see a really good rally here. I am as close to 100% confident as you could pretty much get in the fact that we're going to see a short-term rally. But when it comes down to it, what is the whole year going to have in store? That's a really tough question, but look at this call activity coming through. If you guys did not see the video earlier, definitely go ahead and check that one out. But look, you got a $50 call coming through for $207,000 for January 2024. Either way you hash it out, a $50 call is not a fundamental play. And even though it's 2024, you still need to see a pretty damn big rally to make a lot of money on that. And hedge funds, they don't like to play super far out the money options. You typically don't see that. You've seen that today, though. The January 20th, 2023 145 call that did come through for about $37,000. Super far out the money options. Last time that actually happened, last time we seen a lot of the 2023s and later Septembers or Novembers for AMC that were like the 50, 60, 70, 80, 145. Do you guys remember that? That was before this last rally. That was before 200%, that 200% rally. So yes, we're in there. We are live, baby. Thank you guys for tuning in. I completely passed out last night. I do apologize for that. It was probably a bad day to pass out because the markets got clapped, but it was a good day to not look at your portfolio if you did not. We'll say that. Chris, Win Lambo. Yes, we are live. Vlog. Man, Vlog is always in the building. So is Cheese Chaser, Chris, Crispy Goodness. You guys are always showing love. Love these premiums for selling puts and calls. Yeah. And And I really hope you guys understand that analogy, that this is by far the hardest market to trade in that you will probably ever see, at least for a long time into the future. These moments in time are very far and few in between, where the markets really don't know where the hell to value companies. Like, growth slowing down, cool, we got that. How much is it going to slow down? How long is the Fed going to have to raise? When are we going to go into a recession? When is China going to open up? When is the energy and the food problem going to go away? So many uncertainties right now, even though there's kind of certainty, right? We know these things, we just don't know like how bad they're going to be. So is 30% down, almost 30% down on the NASDAQ good enough? I don't know. I can't tell you that. I personally think some stocks are way overdone, but that's where you get into the premiums, where virtually on everything, super expensive. Super expensive. Like, I bought an earnings trade today on Ross stores. This thing dropped 25%. So I'm sure the option, I mean, if the option doesn't make at least 100%, forget it. But I bought a $55 put for June 17th that cost $30. That's like 50% off, 50% off the money. And it's that should be like a $5 option, dude. $10 at the max. So it's like, even if you do hit on these trades, like, you're not getting the same risk to reward. Like, during a normal earnings season, when there was not as much volatility, when premiums were decent, you know, could have made 1,000% on this 25% earnings drop on Ross, on a damn retail store company. Get out of here. But I'll be lucky if I make 100% on that. That's the kind of context. It's like, you can hit them, but when they hit, they're not even paying out like it's worth it. So it is good for selling calls, selling puts. Kind of like, you know, if you're a NASCAR driver and you're in these streets doing crazy shit, getting in car crashes and getting tickets, and you're living your best life being a NASCAR driver, your insurance is going to be very high because you're very volatile. The markets are very volatile, so the insurance is very high. That's the best way to look at it. SQQQ calls printing? Yeah, I'm sure. But it's still not the same, though. Like if you had caught, I don't know if you had the SQQ Q calls or not 2 days ago, or well, yesterday, whatever you want to call it now. During the 4%, almost 5% down day on the S&P, like, in a normal market, that would have done like 1,000%, like legit 1,000%. But right now, I would have been surprised if you made over 150% on those options. Because the next day, you could be up the next day 3-4%. So it's very hard to hold premiums. What is going on, Alex Mayer? What's going on? Much love. I'm certain market crashes within 3 weeks. Hasn't the market crashed? Hasn't it crashed already? Like, can we just be honest? Can we just be honest here? Like, the NASDAQ is down 28% in the last 5 months. Like, you've seen a crash already. We need new information to get there. We need more bankruptcies. We need more issues, Russia, Ukraine, China, more inflationary pressures. You need oil going back up. You need something to crack here, and then you're going to be looking at 45% down on the NASDAQ. But until we get something that, like, cracks the system, like 08, right? You drop so much and you stay down so long because you had bankruptcies, you had real problems. The only hard part is like I said earlier, we know growth is slowing down, but you don't know where to value a company. So it's like these companies could all be overvalued still, or they could be the steal of a lifetime. I personally think a lot of them are buys of, yeah, probably the best buying opportunity that we will see in the next 5 to 10 years at least. Like Square, dude, good fucking luck buying this thing at $70, $80, you know, a year from now. It's not going to happen. But my opinion, obviously not financial advice. Do your own research, all that good stuff, because I mean, portfolio has been clapped. I think everyone's portfolio has been clapped. Even if you're a boomer and you own bonds, like, you got clapped too. The bond market is actually down more than the S&P 500, which 6 months ago I did not forecast that. I did not forecast the bond market to go down so much, but that's drying up a lot of liquidity as well. The bond market is about it varies, but about 2 to 5 times larger than the stock market. So that's really drying up a lot of liquidity right now. Why your pops Lou putting dates again? Now it's June 1st. Didn't he learn from March 3rd? Man, I like you and all, but man, you know what you do. You know what you do. Yo, what is going on? Dan the man, smash the like button. Yeah, tickle, tap, touch, or smash that like button. Get freaky with it if that's what you need to do. I don't care. Hit the like button. Don't short it. There is zero return on not hitting the like button. You know, and shit, if you don't like me, hit the dislike. just do something, during these volatile times in the markets. The worst thing you could, but I'm not going to go there, because I was going to say the worst thing you can do is do nothing, but usually it's a pretty good idea to do nothing as long as you own something. But don't be the generation, don't be the people that have access to all the financial knowledge your heart could desire. I mean, you motherfuckers learn more than people in college that learn this shit. Like, don't be the generation that knows everything and owns nothing. Especially when you got these kind of deals just everywhere. Like, I look at everything and I'm like, damn, that's a good deal. So don't be the generation that knows everything and owns nothing. Did my camera turn off? No, we're still live. I say by the first week of June for squeeze, and no later than the third week of June for market crash. Can't explain without a phone call. No, I get what you're saying. I think personally tomorrow, granted, it is a Friday, and if you're going to get a bearish sentiment, you should get it on Friday, because naturally nobody wants to hold over the weekend in these volatile times. I don't even know what to call it anymore. A fucking crash. Nobody wants to hold over the weekend. Big money, they don't like to do that. That's why you typically see, sell-offs on Friday. If you don't, that's usually a pretty damn bullish sign heading into the following week. There's something called down Friday, down Monday, or down Monday, down Friday. Either way, it's basically that, right? So if you have a red Friday and then you have a red Monday, like, sentiment is shit. It's terrible. Like people don't want to hold anything. They don't want to hold things to start the week. They don't want to hold things, the last day. It's just a bad sign. And we're not quite seeing that right now. I believe last Friday was green. And what was Monday, actually? What would Monday been? The 16th? Yeah, Monday was down. What would have Friday been? Let me double check myself. The 13th. Yeah. So Friday we were up 2.39%. Obviously to close out the week, and then Monday we did fall 0.41%. So you're not quite seeing that down Friday, down Monday. That's going to be something I want to pay attention to. Are we in a recession already? Probably. Yeah. I mean, Like, just look at gas prices. Like, how do you, oh my God. Like, you gotta make it, man. I don't even know. Some of you motherfuckers are Hollywood, live in Hollywood and shit. But if you're just an average person, you are spending like at least two times more on gas, food, other things, just because of inflation. I think the like Russia-Ukraine thing is mostly due to that. So hopefully it'll clear up in the next couple of years. But I mean, the gas pumps in Michigan are starting to be programmed for potentially $10 gallons of gas. You're talking like Great Depression if that happens. Like, if that happens and goes on for years, dude, we don't even want to talk about it. Like, we haven't seen the start of it. But probably I think people are cutting back, and you can see that in the earnings. Lowe's, Home Depot, those were a little bit better, but you look at Walmart, you look at Target, you look at Ross, and they're all saying people are not spending money on discretionary items. Discretionary, even meaning like instead of buying the new iPhone that's $1,000 or whatever price it is, you're gonna go out and buy a $200 phone because even essentials, you're not gonna have enough money to buy that discretionary item. And a lot of the markets are controlled by discretionary kind of stocks. Look at Apple, right? That's 7% of the S&P, 13% of the NASDAQ. If you lose Apple, I mean, if Apple's bad, like if they just have really bad numbers, like I think, like the markets are going to take a very long time to get back to all-time highs. That's why I'm not a fan of specific, just S&P 500 index funds, because you have way too much exposure in discretionary stocks. But I do like Google right now, but there's so many better buys out there that I mean, look at Sofi, look at DraftKings, like it's ridiculous, honestly. Yeah, Ken is like, oh, it's their fault. They're bad for investing in companies. Yeah, he said retail turned to the markets for entertainment. Apparently, and that's somewhat true. I think some people do it because it's fun. I do it because it's fun, but you're here to make money when it comes down to it. And then he also said there was essentially he said there's a lot of opportunities out in the markets, and I was thinking the whole time, like, yeah. If you're the market maker, there's plenty of opportunities out there. You're just taking all the money. Might not too bad. I'm just bidding my time. It might take years, but I'll make my money guaranteed. I did it with Bitcoin. I'll do it with stocks. Who you talking about? Me? Hope you're not talking about me. I'm only speaking my mind. Oh, no, I wasn't talking about you specifically. No. But yeah, that's the attitude. That's the attitude you have to have in this market. Like, if you can't handle, markets going down for a couple years, then unfortunately this is not the game for you. There's other ways to make money out there, but we're probably not going to see these V-shaped recoveries, which is a beautiful thing, though. Like, you have so much time, to buy these companies that potentially you wanted to buy that were just way too high, like Fubo. I always wanted to buy Fubo, but not in the 30s, 40s, 50s, 20s, 10s. No, I get to buy it at just over $3, like substantially under its value. Like, that stock is substantially undervalued, like substantially, and it's got a couple things going against it, right? Subscriber based companies have not been doing so well. Look at Netflix. And they're also not profitable. So it's like you could potentially buy really good deals right now. But, like, it's not going to be a V-shaped recovery. So it's probably going to last at least a year. I picked up 10 SQQQ, 44.43, 617 call debit spreads for 30 apiece. Sold off 5, made all free, been slowly selling off at 100% profits. Yeah, that's the best way to do it. Like, when you can make stuff free, especially in this market, yeah, that's the way to do it. Yeah, like the like button. Exactly. I'm old. Why should I put my money in a savings account where I make nothing or next to nothing when at least in the stock market I watch it go up and down? Yeah. $5 remember Pennsylvania. Yeah, geez. We're not, I think we're at like 460, 470. It might be higher now. I try not to look, but when it went from, I think it was at like the low fours. I think it had dipped down back into the threes for a minute, and then it was like overnight, it was back to like 460. I'm like, what? And I gotta do a lot of driving too, so it's hard out here for a pimp. This might actually be good for Tesla though, or Lucid or Polestar. You're the degenerate gambler, remember? Yeah, I am guilty as charged. Paid $5.35 today in New York. Oh, yeah. I feel like just, why is New York so expensive? I get like Wall Street and all that, but I feel like I would not want to live in like city New York. Who dropped AMC overnight in January from high 20s to 1350s? Oh yeah, that was Citadel for sure. Exactly where all the fish swimming in the pond, and he still got a yacht. There we go. I am a smooth brain. But to me, it looks like the entire market trades like one big ETF right now. Are you seeing that? Yeah, the correlation is historically high right now. So if the top 5 or 10 stocks do bad, then everything pretty much does bad. Today was a little bit different where you did have certain pockets of the market that did well, like a lot of the stocks that are down massively, like a Sofi, for an example, was up 7%. A lot of stocks in my personal portfolios that have gotten absolutely decimated actually had pretty solid days today. I think my portfolio was up like 6%. So some things did well, but what you're actually seeing right now is something that does not happen too often, where a lot of your quote-unquote value or safety stocks people like to run into when there's uncertain times, like what's the damn company called, like a Colgate or a Procter and Gamble or a Kroger's, or even a Walmart was seen as like one of those safety stocks. It's not too safe these days, but yeah, people have flooded money into those and pushed those up so high. Look at Costco. Jesus Christ. And you're at a moment in time where these stocks that have sold off 70-80% in some cases, most of them down over 60, in between 60 and 70, some are a little bit more extreme, that they're cheaper than some of your like value safety stocks, and that does not happen that often, and not at all. Like that's a very rare phenomenon where you kind of have a lot of fear in the markets, and it's stayed for a while. But yeah, the whole market's trading, yeah, like an ETF, 100%. Hedge fund managers talk smack about retail investors, then they can turn their attention elsewhere. Right. Oh no, yeah. They'll talk shit, but they still want your money. See after November 22nd, then let's see how the economy, the stock market, inflation, everything else starts going. You know, the primaries and the midterms. Yeah, that's what I'm talking about, people. Yeah, this is like really bad for Democrats. Like the longer this goes, the higher likelihood of them losing political power is getting more relevant, I guess. Like everybody hates gas is high. Some people hate the stock market's down. Like those two things, you're pretty much covering all Americans. And I mean, you got like a baby formula shortage. Like, thank God I don't have a baby right now, because the fuck am I gonna do living out in the damn boondocks? Shit. I hate living by people, so it's alright, but there ain't no baby formula. You got World War III slowly starting. You got China and COVID. Just that, you can't really do anything about that, but you got a lot that's going wrong in the world right now. So, not looking so good. Midterms are historically good years, though. That's what's interesting. So we'll see if they try to fix anything, but obviously they want gas prices high. Like I said on, I believe, the last live stream, the government could come out and open up the Keystone Pipeline and oil would drop 10% the next day. But they don't necessarily want that, which is weird. You would think they would, but movie theaters are profitable on the daily. Free money sent by the government during COVID drove up the markets. Now we're paying the price now. Buy lots of popcorn, candy, and cherry Coke. Yeah. I mean, Jersey Recycler, I mean, you're not wrong. You're definitely not wrong. There was sections of the market that definitely got overinflated, and it was pretty easy to see at the time. You know, but by and large, like earnings were good. Like, some of these companies deserved their valuations over the last 2 years, right? Because essentially what happened, yeah, people gave out stimulus, earnings were good, and this is like what is so surprising the markets didn't understand this, is with all that funny money, it's not going to last forever. You know, once that is gone, the numbers are going to get worse. But that was basically my theory and thesis for the last 6 months on why I thought the markets were going to essentially do this. I didn't think it was like going to do it this fast. I expected a harder, faster crash and then a slight recovery. That's all I've ever seen before. I did not invest through 2008, but that's kind of what this market is looking like right now, is more like a 08 kind of market. You know, you just kind of go down, you trend down, and you get down here, you're like, is it over? Have we hit a bottom? And then it's like, oh, no. And then you get just a final bucket flush out. And then you slowly start to come back once the Fed becomes your friend again. But it's going to be a while. It's going to be a while. So I do highly suggest taking a little bit more money now out of your check or whatever it is and just putting it to work. I highly doubt you would be mad at yourself for doing that. Give it a couple years. I breastfed my last baby. Shit, the rate is going? You're gonna have to. Everyone's gonna have fucking breastfed babies. Can't get formula. Shoot, I know a couple people too that are looking for it. Especially if you need like a certain kind, like my daughter, she had to have like the sensitive stuff. Like, she would puke. She still pukes to this day. I can't feed her in the car without this kid puking. So I couldn't imagine now trying to find, was it like Similac sensitive infant? I don't even know, like certain kinds. Crazy. No 28K, and I made some money today in GME. There you go. You say you made 28K today? I know you're a baller, Carla. I know this. She don't gotta flex on me like that, okay? I'm just playing. That's alright. I hope all you motherfuckers become like multi-mega millionaires. Like, man, get me a little super chat or buy me a Lambo. Buy me a house or a boat. When you guys become Warren Buffett, that's it. Okay? Don't forget Sri Lanka, those poor people. Yeah, it's hard out here. Like Pelosi and her husband insider trading, they got busted. Oh yeah. Oh yeah, Congress kills it. Congress is almost as bad as Citadel. And let me be honest here. Let me clear the record if nobody has heard this before, but I don't give a fuck who buys anything in Congress. But report the shit the same day. You know, if Pelosi started buying AMC, for an example, I want to know that the same day. I want to know that like 10 minutes after she bought it. I don't want to know that 45 days later after the stock went up, 1,000% because there was some, deal, stuff like that. Buy whatever you want, but just disclose it, the following minutes and you're good. You know why? Because India or somewhere out there is bidding higher for us for the baby formula because the U.S. dollar is on the chopping block. We're up against the world, against the dollar. No good for us. Well, the dollar, see, this is very interesting because Warren Buffett, Charlie Munger said not too long ago, not at their investor meeting that just happened. What was that? Was that like 2-3 weeks ago now? This must have been a couple months ago. But I believe it was Munger that said the best bet any investor could make right now is that the dollar is going to zero over the next 100 years. So I actually like to talk about that concept of the dollar a lot. That's why you want real assets too. That's why you want stocks. That's why you want real estate. Buy a damn boat if that's what you want. At least there's some value there. But when you really have to worry about that, like all jokes aside, when you really have to worry about like the dollar going to zero, because eventually it'll happen. It's always happened in history. There's always been a new reserve currency. Sometimes there has been a couple, at the same time in history, but there always tends to be the one that ends up outliving, and it's not going to be the dollar. It's not going to be the dollar. We know that at this point. But when the dollar is no longer the petrodollar, that's when you need to worry. When transactions are no longer being done in U.S. dollars for oil, that's when you have a problem. That's when you have a big problem. Because right now, there is still like 50% of the world uses the U.S. dollar for all their oil transactions. But a lot of people have been switching to the yuan and the euro. So wouldn't surprise me if the euro becomes the new reserve currency. You're in trouble because later on she's only going to want room service. Hopefully, I mean, God willing, if shoot, have whatever you want, girl. She's so cute. See, I want a son, but I'm like, damn, I'm kind of glad I had a girl. If Amazon puts 2 way out the money, we're up 2K and I didn't sell. I don't know why I can't hit the sell button. What, did that really happen? Like they wouldn't let you sell it? That's the worst though, cuz like I'm pretty good at being early to trends, like this whole market, going down thing. I was early to that. very, very early. Before I ever seen any analyst talk about it, I was sitting here talking about it. I was early to it, but that's the hardest part. Like when do you sell? Like, either I'm really early and I buy too early and then I just get clapped, or I hit the trade and just get out a little bit too early. That's usually how it works with macro trends. Usually very early to things. That's why I'm telling you guys right now, this is probably the last great buying opportunity that you are going to see in the next 5 or 10 years. So buy what you can now. But you don't need to panic, you know. You don't need to, put a lien out on the house to go buy. Like, there'll be plenty of time, but. Son, if I hit the lottery, you will not live in Michigan anymore, man. Take me away. Canada was rated as like the top country to live in the world for like 10 years now or something crazy like that. Canada sounds real good right now. At least you get like free healthcare. Like, Canadian stocks are popping too. You guys know that, right? Canadian stocks are like doing well right now. Like, Canadian tech stocks are killing it. It's kind of wild. I heard there are recipes to make your own baby formula. Man, I can hardly make a bowl of cereal by myself, or a grilled cheese. I'm just playing. The cereal was extreme, but a grilled cheese or some, man, I can't even make homemade pancakes. I can make a killer steak though. Now I can kind of cook. I'm not gonna sit here and lie to you guys. A little bit, but definitely not make my own baby formula. That sounds like something a chemist should do. Is your Tesla price prediction for tomorrow in AMC? I don't know. Tesla. Ugh. I don't know. I don't know about Tesla. Tesla's really different right now because the whole Twitter, situation. Elon basically going on margin. It's really hard to predict Tesla, but AMC, I think we'll probably have a solid Friday because this is the last day, obviously, of this week, and then next week is going to be the last week until the executive order will go into effect the following week after that. So, wait, is it Friday? Yeah. So that executive order is gonna go back into effect the 2nd or the 3rd, and that'll be not next Thursday or Friday, but the following Thursday and Friday. And you typically do see a move up before that executive order went into effect in the past, right? Like, the executive order went into effect on this day, January 27, 2021, but the stock had actually went from $1.91. Oh, did I go in too far? Did I zoom in too far? I think so. Yeah. The stock went from $1.91 all the way up to like $4 or $5 before the executive order actually went into effect in January. Like, you've seen a substantial run up before it went into effect, is basically what I'm trying to say. Same thing back here, right? The stock pretty much plateaued at $9, $10. Remember the fight for the 8s, the 9s, the 12s. You guys remember that time, right? And you've seen a rally going from 9 to 15 back down to 11, and then you've seen a pretty substantial rally before the executive order actually went into effect on did it go into effect on June 2nd? Yeah, it went back. It got taken away on June 2nd. It went into effect on May 27th. Yep. And then you peaked out the day that it got basically put on hold. So you've seen a rally, even up until the 27th, you've still seen a substantial move up. And then it got implemented, and then you've seen a big rally. So I would be inclined to think Friday's probably going to be good, tomorrow's probably going to be good, and then next week will probably be good as well. Like if we could get back to like 25, 35, and then even start to head into a rally and then one big day. Like if we get to 25, $30 and then you see call it 100% rally from there, you're going to be looking at like $70, and then let's say you get one 200% day. I mean, you're going to be pushing like 150, 180. That's kind of what I expect. I don't know how high it'll go, but yeah, I think it'll be good. I pawn my undies to buy more. Man, I feel you. I feel you. Just sell feet pics too. I mean, gotta do what you gotta do in this market, man. You just gotta do what you gotta do. Market, take the first opportunity to take profits 100%. Yeah, take profits whenever you can. Like, trades are not gonna hit like that unless they are like a target that had like a 5% expected earnings move and the thing drops 25%. Like, those kind of trades, they're really only like earnings trades. Like you're not really getting the same level of returns right now because the premiums are so high. So yeah, I would not hesitate to take profits in this market environment when you have them. You put ketchup on your steak? Oh man, you remember that? You remember talking about that? Damn. Yeah, I love ketchup on the steak. It's so good though. Like, I don't get steaks at restaurants because I make my own and I feel like they're much better. So I'm always disappointed. So it's kind of like a curse at the same time. Disrespectful. Oh man, no, not funny last January. Oh jeez, yeah, you are a baller, Carla. Lost 100K? Yeah, you're a baller. Evergreens, hey Moasters. So June is the big day, huh? Evergreens. Man, we love you, Evergreens. We do. We do. It's all love, bro. Fuck, Sundial is going to get delisted here shortly. Yeah, Sundial. Be able to lie, skin a rabbit and eat it. I could if I needed to. Like, I know how to do that or cook stuff, but What do you think of Fubo? Man, now you're speaking my language, Dan. You're speaking my language. I think Fubo is extremely undervalued. Extremely undervalued. Like, man, I don't know of a stock that is more undervalued than Fubo. Honestly. I just don't. This stock is projecting over $1 billion of revenue. And it's trading at, last I checked, like $500 million. It's like a half of one price to sales basis. Stupidly cheap. Like, anything under a 1 is considered cheap, but you're you're half of 1. You're just like, I don't, man. It's beyond me. I don't know why it's priced this cheap. From what I've seen, it's doing very well. I mean, all that you could really ask for out of a 600, what is it? Yeah, $600 million market cap company. This company's bringing in over $1 billion for full year 2022 in total sales. Give me a break, dude. Give me a break. But it's not profitable. So they're going to say it's overvalued. But it's good. Crazy. As of April, there was 11 analyst ratings on this. You got 2 strong buys, you got 5 buys, and you got 4 holds, 0 underperforms, and 0 sells. Rated 2.4, so in between a buy and a hold. Decent, honestly. Lots of downgrades, though, because it's unprofitable. The average price target is about $9.81 per share. The high price target is $28. And these are 12-month out projections. Price targets are 12 months out. So, I mean, $3 is the lowest price target. And that's like stupid undervalued. But like Fubo is, in my opinion, attractive for other companies to buy out. Like, what is to stop Netflix from buying out Fubo right now? Probably not much. So I think worst case scenario, it gets bought out for much higher than 3. Like, worst case scenario. Win nanny that can cook? Man. That's a good idea. You know, my ex like never cooked for me, so I could get a nanny that would do that. That's great. Girls be like, I want a wedding ring. Man. It's funny. It's all good though. I can cook a little bit. Harley Davidson hit a yearly low today. Puts printed. Could be bullish for tomorrow or Monday. Yeah, Harley Davidson had the that they're shutting down like all production. It's because of something like a regulatory concern. There was a few IPOs that ripped. Yeah, what was the last IPO? I remember New, like the Brazilian bank, but you've really seen the IPO market just stop. Tyler, is it a good idea to roll a position? Or, I mean, yeah, no, like if you're early to it and you're only down like say 30% or something, and you think just more time would help, then probably. But if you're down more than like 50%, tough call there, you know. Just depends on what your conviction level is. Like if you had like May 27th right now on whatever company puts, we'll just call it puts, and you were down like 50% and you wanted to roll it over to something that was like 10% further out the money in June, might not be a bad move, you know. The masked investor says he makes around 1,000 a day. Is that possible for inexperienced people like us? There. That's a tough one to answer because there's no secret like recipe for making a certain amount, unless you have like a $500,000 portfolio and you sell premium, right? That's like the closest thing you can get to consistently making a certain amount. Different strategies. I wouldn't necessarily say like you guys are super inexperienced, but when you're doing a certain kind of strategy and doing something a certain way, you can be consistent, but usually you know, it's not quite there. That's a hard one to answer, honestly. It's like a yes and no kind of thing. It just depends how much money you have. and what kind of what you're doing. Like in this market environment, like it's going to be harder than not. Like during a normal market, say you had good or bad news. Say you had good news in the beginning of the day. The markets just like the markets used to have a trend to them. There's no trend right now. So if you had good news in the morning, I mean, to be down like 2% by the end of the day is not too crazy, you know. And that's where it's hard to do anything more than just scalping. Like if you're scalping, that can be very well. You could do very well right now, but there's just no direction in the markets, so you got to be quick. Yeah, just stick to the plan and follow the rules. What about Sofi? That is one of my largest holdings. Sofi is just a great business, like when it comes down to it. But it's not something that's gonna like make you rich tomorrow. It's not like an AMC. Like it does have a very high short interest of like 21%, and eventually that will, fuel a rally for Sofi. But it's not something that's gonna like squeeze or nothing like that, right? So that's not what I would expect, and you're gonna have a lot of shorts in the stock as long as the Fed is raising rates this aggressively and there is consumer slowdown fears. It's not a something that I would expect to make money on like in the next year. Essentially, you got to have like a 3 to 5 year at least outlook for Sofi. But I think it's a 10x stock in the next 5 years. I think it's a $70 billion market cap stock in the next 5 years. And they got their bank charter now, which is huge. But yeah, lots of insider buys. And there can be hundreds of reasons why somebody sells, but there is only one reason why insiders buy a stock. Because they think it's going to go up. And when eventually, when student loans need to start being paid back, that's going to be a lot of business for Sofi. So Sofi is putting up incredible numbers right now. And their main business segment is not even functionable. Like who the hell is refinancing student loans when they don't have a payment? People only refinance when they have a payment. So yeah, I do think Sofi is good. I blocked the masked investor and reported it. Man, some kids are so annoying and weird as hell. That's funny. Following their 1348, but subscribe to it. The rules are to get in and cash out quickly. Sometimes the 1348 works, sometimes it doesn't. In this market environment, like it's not going to be there for the most part. If one headline can, I mean, you guys know what a headline can do these days, right? That could mean the difference between the markets up or down 2% or 4% on any given day. So that's where it's hard for that strategy. In a normal market, it does work more so than not. But personally, when I'm scalping, I like to look at a lot of different things. I like to take into consideration what the news is for the day. Could it be seen as positive or negative? What's the likelihood? I've been doing this a long time, so I'm talking market sentiment here. What's the likelihood of this turning into a potentially negative catalyst? And then I do like to look at, the moving averages, look at the 1 minute candles, obviously, the formation of the candles. But like Evergreen says, it's so quick. Like most of the time it's like a 30 to 30 second trade sometimes. But yeah, but it's not bad. Like if you can get like a 1348 crossover, you can get the like the VWAP, volume weighted average price. If you're looking good around that, you're either holding support or you're flushing under that. You get to a key level and it's still looking good, whether it's bullish, bearish, whatever direction it is. A couple other indicators as well. You can look at the MACD, whatever you want, but yeah, you want to look at multiple different indicators, and then it can be used good for sure. But this market it's very bipolar. So you got to be quick with it. Would it not be better to invest on other companies post-MOS? I think investing pre-post, just always is going to be a good thing. As be reasonable with it though. Like if you hit a fat bag on the MOS and you're essentially set for life, think about what you'd do with $1 million right now. Depending on your age, it's going to be a little bit different, but by and large, I would hope that, we'll say you hit like $2 million, and you should invest at least 50% of that. You should at least invest $1 million, aim for 3 to 5% in dividends. That's $30,000 to $50,000 a year, and then especially if you're like 30s or 40s, like that's probably decent. Or maybe I should say like 50s or higher. That would be good. But if you're younger, you can be a little riskier. And then but you definitely want to be investing in quality companies, especially right now and after too. You ever enter a trade and you're up 10 to 15% on entry? That's when you immediately exit, aka a scalp. Yeah. And then just cut losses quick, I use the 8, 20, 50, 200. Yeah, I really like the 50, 100, and 200 on the 1 minute. There's a lot of correlation with the trading algos around those moving averages. Oh, what the hell? Lots of correlation. Now, it's been a little bit weird in this market though, but you could see, and more specifically the 50-day is what I like to use more. Like you can clearly see, when like the S&P is holding a lot of strength and specifically getting these large candles under the 50-day and then retracing back above in the same candle for this many times, it's usually a sign that you're going to get a big bullish reversal, right? If you can hold the key levels, it's usually a good sign rather than not. But that's the thing, it's just so quick. But I do like the 50-day moving average on the 1 minute candles too. That's a key. But it's not for the faint of heart though. One candle can be the difference between like up or down 10%. I would love to load up under 10. Yeah, that would be a no-brainer. That would be like, I feel like everyone just would buy the stock under 10, like even institutional investors, because that's more so like around its fundamental valuation or higher, lower, give or take. You have seen a lot of multiple compression, so it's unclear what any stock's fundamental valuation is at this current moment. Hey, handsome, it's your girl from the UK. Thank you for keeping my conviction alive all these months. AMC has been so volatile, but I have been keeping a hold of my shares because of your videos. Let's go. And I think you will be rewarded here. Don't mark my words on it, but all of the signs that we have been waiting for are looking pretty good. This executive order, that's something that I really didn't know about until like a week ago. And that looks very promising. So I'm glad, and I hope it pays off very well. Thank you. Please won't happen until next year. I really don't care how long it takes, honestly, but I do think we're going to get a rally. I bought one option today because I figure I'll have time to buy more tomorrow or early next week, if anything. But I did buy a June 10th $25 call, I believe, for $50 today. June 10th. June 10th, 25. 30. So June 17th. AMC did come down though. Was it a 20? It might have been a 20. Actually. Yeah, $20 strike for June 10th. I think that could be really good if we do get a rally here. Little bit of extra time, but not too crazy. How much do you think an option on AMC will cost if AMC hits 300? It's all about how deep it is in the money. So if you had bought $100 call and the stock's at 300, it's at least going to be worth $20,000. If you bought a $50 call, it's at least going to be worth $25,000. Plus your time premium. It's called intrinsic and extrinsic value. So intrinsic would be like you bought an AMC $20 call, the stock's trading at $25. Its intrinsic value is $5 or $500, whichever way you like to look at it. That's intrinsic value. Extrinsic is the time premium, and that's where things can vary. That's where you could, be a math demon with the whole theta and all that. If you've been trading options for a while, you kind of know what the time premium is going to be worth on options, and then that's your extrinsic value. And that could be quite substantial. The more time you have, the more extrinsic value that those contracts will hold, because the more the stock could potentially move. After the most, I'll take you out on a date, I promise. Don't you live in like the UK? I was in Los Angeles last week and it was amazing. I thought you lived in the UK. Futures are contracts which have no expiration date. Perpetual futures. The next few weeks pan out, Tyler. I really wasn't sure about coming forward with that order. Yeah, no, I think that's yeah, I think that's a really big deal. Just buy options with more time to avoid thinking about theta at all. Yeah, pretty much. I mean, just depends if you're holding them or not. When the markets trade sideways like this, the calls and the puts are getting destroyed right now. Like, nothing is hitting. Just, like getting more time on it. Even the puts, like if you had bought puts up here and they were like far out the money, like a $400 put or $350 or whatever, you thought the markets were going to tank, whatever the deal is, You know, you spent like $2,000 up here. Just call it a $400 put. If you bought like a $400 put up here, $75 out the money for like June or for August, and you spent $2,000 on it, it's probably trading at like $3,500, $4,000 right now. You made like 100%. That's shitty considering. So you just got to be careful with the time premium, because it doesn't always make a trade better, but it usually does. Usually does. A lot of people want to buy leaps right now, like long-term calls, and that can be good. Just depends how long inflation lasts and the Fed has to raise. But generally speaking, that is true. Do you teach these things in a Discord? If people, have questions, then yes, but yeah, that's like with options. When you're trading options, you always want to make sure that you're buying something that could reasonably get into the money, right? Like, you don't want to buy a $200 SPY put right now, because the odds of that getting in the money are like virtually nothing. So you're pretty much buying a dead option, right? And then you can factor in the time and all that. That's still a dead option, because there's no way the SPY is going to 200 right now unless you get bad earnings, the Fed completely rug pulling us, just shit hitting the fan, and we don't even have earnings for another 2 months. So that's a very dramatic example. Or even like a $300 put right now is pretty dead in my opinion. I don't really think the SPY is going to go down to 300 or sub 300. That's going to put you firmly in the COVID crash zone, and I don't think that's going to happen. So you always want to make sure, no matter what option you're buying, there is a reasonable expectation that it could go into the money. If it can't, then you want to get extra time, and you want to play the momentum, and you want to get out, because it's still probably not going to go in the money. Yo, win Lucid. I don't know, man. Those damn cars are so expensive. They did good though. Saudis increased order on Lucid, $20 tomorrow. Depends on the SPY. Yeah, pretty much. The correlation's so high right now. That's basically what it is. Depends on what the S&P does, or the overall sentiment, but Lucid kind of did its own thing today. A lot of stocks did their own thing today. The ones that have been beaten down. How much is your Discord? It's like $20 a month. It's not bad. 30 Tesla calls the break even is 805, so I'm 15,000 in negative. Ooh. Be careful. Yeah. Yeah, Tesla's just a very hard one right now with the Twitter deal, and Elon, essentially margining his Tesla shares. So it's a really tough one to try to swing. Do you have the Discord during the day? Yeah, I send out trades that I make. Besides scalp trades, I can't put those out because they're so quick. And like 30 seconds could be the difference between you making or losing money sometimes. But swing trades, yes. I really only made like 2 trades today though. I bought a Rost 55 put for June 17th. $30. That was up like 30% by the end of the day, but that was an earnings trade. And then an AMAT $70 June 17th put for $25. So keeping it pretty small here. Premiums are super expensive. Like Rost, This was almost 50% to break even, and it cost $30. That's nuts on a stock that does not move like that. But the stock did fall 25% in after hours on earnings. So with that extra time, should make at least 100% on that option, if not like 150%. If the stock continues to go down tomorrow, which it looks like it probably will, the last candle was the low of after hours, then it could do decent. But they're scamming on premiums right now. It's a 100% scam. So you just want to keep things small, or just buy shares. Like that's the play right now, is just buying shares. You know, I've been buying Fubo, I've been buying Square. I do have some BP calls. I've been buying a lot of Square and Fubo, honestly. AMC, did buy the AMC June 10th $20 call, but right now is not really the time to be, you know, just throwing money out there, in my opinion. I say I make mistakes because I'm so tired all the time. Yeah, I feel you. AMC 617 $40 calls, only $32 a piece. Yeah, it's not a terrible. Yeah, I like where your head's at. It's really not terrible heading into the next couple of weeks. Not at all. What's overall more profitable, an in-the-money call that runs up, or out-of-the-money call that runs in the money? Well, like an out-the-money option has a very, well, considering a normal market, like everything's out of whack right now, because what shouldn't be possible or shouldn't be probable is now somewhat probable because the markets are freaking out. So, this could be a little bit different from current market conditions, but the reason out of the money options are so cheap a lot of the time in a normal market is because there's a low probability of that happening. So if it happens, then you can get paid out massively. I had Redfin, two Redfin $60 calls back in, I believe it was like January 2021 expiration, like the end of COVID, end of 2020. And, I bought them for $15 a piece and closed out over $2,500 a piece on those options. I made like $5,000 off $30. You're really not gonna find that now, and that was just because the stock went on a huge ass rally. You're really not gonna find that now, but you know, by and large, you'll make more on out the money calls that go into the money, or out the money puts that go into the money, because there's a low probability. But that's the thing, you'll lose on a lot of them too. In the money calls, you know, like they cost more. So say for an example, you bought AMC $500 worth of calls that are in the money. If the stock goes up, you know, $5 or whatever, $10, you're gonna make 100-200%. You know, you're gonna make, say you make $1,000 off of that. That's cool. But if you would put $500 on calls that were really far out the money and it actually went there, you could make $5,000 or $10,000. But you have a lot higher odds of losing your whole 500. Yeah, out the money that runs in the money, more profitable. Yep. Yeah, but that's the thing too, like factoring in the cost of them is pretty important as well, especially right now. It's like some of the options that are super far out the money are super expensive relative to the probability. Like if, say there's like with this Ross trade, there's time on it. So, you know, granted, you have the extrinsic value factor, but, you know, for a 50% drop on a retail company like that, not very probable. What, like a 1 or 2% chance that it's actually going to happen, maybe less than that. But they're still they're still really expensive, considering the low likelihood that that actually happens. So it's a little bit It's a little bit messed up right now. Not quite the same risk to reward on lots of options. But yeah, that's pretty much going to be it. Thank you guys for tuning in. Appreciate every single one of you guys. Evergreens coming in here showing love. Carla, Astifa, TB, all of the mods, Cheese Chaser, Vlog, Oogly Boogly, AMC, my guy, Chris, all of you guys, Wolverine. You kind of don't like the chat sometimes, but it's all right. We love you. We love all you guys. Holder of the shares, all of the members in here. Thank you for tuning in. Enjoy the rest of your night, and I will see you tomorrow. Hopefully, have some green portfolios and do a little buy the dip action. That's what I'm talking about.